You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, May 22nd, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com, and it's the top 5 things to know in the market on Wednesday. The first thing to know is there are blacklists and backlash. Nearly half of U.S. companies operating in China have already been hit with retaliatory measures since the U.S. increased and widened tariffs on Chinese imports, according to a survey by the American Chamber of Commerce. That's with around 40% of the companies surveyed said they are considering relocation of their facilities. The news comes as the New York Times reported that the U.S. may add more Chinese companies to a U.S. blacklist, including Hangzhou Hikvision Digital Technology, the world's largest maker of surveillance cameras. Elsewhere, Bloomberg reported that the U.S. administration is planning to increase subsidy payments to U.S. farmers hit by Chinese trade countermeasures. It said farmers may get up to $2 a bushel for soybeans and 63 cents a bushel for wheat and 4 cents a bushel for corn. The second thing to know today is stocks are set to a mixed open pre-open. They were anyway. Wall Street was set for a mixed opening as the negative news flow on trade was offset by somewhat by comments from the Chinese ambassador to the U.S., saying that the door was still open for negotiations. Some support is also coming from comments by James Bullard, who became the first senior Federal Reserve official to admit that its interest rate hike in December may have been a mistake. The third thing to know today is, will the retail woe continue? Target and Lowe's will be in the spotlight Wednesday after a generally disappointing round of earnings from the retail sector on Tuesday. Nordstrom tumbled over 9% in after-hours trading on Tuesday after reporting disappointing sales figures, while Kohl's had earlier fallen 12%, both continuing to struggle with secular pressures on brick-and-mortar shops as well as higher purchasing costs due to the imposition of import tariffs. Fourth thing to know, Qualcomm is hit by a court ruling. Qualcomm shares are set to come under further pressure on Wednesday after a federal judge ruled that it illegally suppressed competition by charging unreasonably high royalties and squeezing out rivals. The decision by a San Jose district sided with the Federal Trade Commission, which brought an antitrust lawsuit against Qualcomm in January of 2017. The chipmaker's stock has already been battered this week by the threat of losing billions of dollars a year in sales to Huawei. And the fifth thing to know today is May's last Brexit gamble backfires. The British pound fell to within a whisker of of a new low for 2019 after Prime Minister Theresa May's last gamble on getting her EU withdrawal bill through Parliament backfired. Proposals laid out by May on Tuesday, which included long-term alignment with EU regulation on workers' rights and trade policy, along with a second confirmatory referendum, have angered her own party's lawmakers to such an extent that they now appear intent on forcing her immediate resignation. The political upheaval overshadowed data Wednesday showing inflation had crept back up above the Bank of England's 2% target in April, although the 2.1% reading was less than the 2.2% expected by analysts. Our second story of the day is from theblockcrypto.com. CME Bitcoin futures trading clocks in a number of new records in May. CME Group, the exchange giant behind one of the markets for Bitcoin futures, continues to clock in new records for its contract tied to the largest digital currency. May is shaping up to be the strongest month ever for CME Bitcoin futures, the Chicago-based firm said in an external email sent out to clients today. Specifically, the firm saw a record trading day on May 13th with 33,677 contracts having traded hands, the equivalent of $1.3 billion worth of Bitcoin. In total, the average daily volume hit a record of 14,000 contracts in the month of May. CNBC brings us our third story of the day. Mortgage refinances surge 8% as rates fall to the lowest level since January of 2018. Homeowners are taking advantage of lower interest rates, rushing to finance their mortgages before rates potentially turn higher again. Total mortgage application volume increased 2.4% last week from the previous week and was up 15% from a year earlier, according to the Mortgage Bankers Association's seasonally adjusted index. Refinances drove the numbers, jumping 8% for the week to the highest pace in a month and 31% annually. Refinance volume is highly rate sensitive each week. The average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances decreased to 4.33% from 4.40%, with points increasing to 0.43 from 0.4, including the origination fee for loans with a 20% down payment. Our final story of the day comes by way of MarketWatch.com. Oil industry is cutting jobs at the fastest pace since the financial crisis. Automakers are laying off employees at the fastest pace since the financial crisis, according to outplacement services company Challenger, Gray, and Christmas, Inc., as the industry struggles with evolving consumer demand and new technology-based competition. The industry has announced 19,802 in the workforce reductions this year through April. That's more than triple, up 207% than the 6,451 job cuts announced during the same time last year, and the most for the first 4 months of a year since 101,036 cuts were announced through April of 2009, according to data provided by Challenger, Gray, and Christmas. Both Chrysler and General Motors filed for bankruptcies in 2009, Chrysler in April and GM in June. And that, ladies and gentlemen, is news you can use for today, Wednesday, May 22nd, 2019, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.